Okay, traders, welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, February 8th. Michael Boutros here with you this morning. Good to be with you guys. Eman, Chris, and Chris is in the house. Mark, Lavender, Pete, great to see you guys all here to wrap up the week. On the menu for today, we are seeing some nice price action start to develop on some of these rebounds or reversals off resistance, I should say. But we got the DXY. We'll go over that real quick, entering near-term resistance as we speak. Euro dollar, Aussie dollar, which is also probing into levels of which, I really wouldn't want to press short exposure from here. But we are sort of at the bottom of the range. So we'll take a look at that. Pound Aussie broke to the upside, obviously on strength in sterling, which we saw post BOE, and as well as continued Aussie weakness. So that broke the upside of that formation. Dollar CAD currently testing near-term resistance. We'll look at that. Keep in mind, tomorrow morning, we do have CAD employment data on tap. So for those of you involved in the loonie, something to take note of. We'll touch on Kiwi Yen. Eman, are you in the house? Yes, Eman is here. You got me all interested on that with that question yesterday. So we'll definitely take a look at that. Good morning to you as well, Eman. Always a pleasure to have you in the room. And then we'll take a look at some of the other crosses. So Kiwi dollar, Aussie yen, and I do want to wrap up with crude on that breakdown, also coming in some significant levels here today. If we have time, take a look at dollar yen. I know the swing side of trades, Jamie's still looking for that short. I'm not really a big, well, you know how I feel about the abomination, but as it stands right now, I still think the picture looks a little murky. So we'll take a look at dollar yen if we have time. Any other questions, as always, that you guys have on trade setups, specific questions, or pairs that you'd like to cover, feel free to throw them on the message board at any point. But let's get started. So before we jump into yesterday's update, I just want to take a quick reference at the DXY. We've been tracking this one for a while. We identified that key support bounce earlier in the week, earlier last week, I should say. That's 88.26 into 88.71. Did charge a bounce on the weekly charts, just to give you some perspective. If we go back without the formation that we've been trading over the last couple of years, you still have some room on the weekly to go higher before you start to run anything. The actual swing low comes in right around 91. You'll see that on the intraday charts. But the low week reversal close that we made certainly highlights a 91.33 clip, and that comes right along the median line. So, precariously looking for some exhaustion on the stretch higher, either a move a little bit higher towards 91, 91.30 on the max. I really don't even want to see it get that high before we start to turn lower again, okay? Remembering, as always, the analog that we've been following, and I'll do it again just because now we're heading towards the end of the week to give you one last reference point. So off the 1994 decline, okay? You take that price action, match it up to where we are right now, and it suggests, okay, that here we are right here. So maybe the end of this week would be the last consolidation week before another breakdown lower. Based on the analog that we've been following, it does suggest sideways to lower before we finally ground out somewhere near that lower parallel. And again, even on the rebound here, the analog would suggest that we would find resistance back at the median line. So as it stands right now, we're heading into near-term resistance on near-term charts. You could see a little bit of a hesitation, but all intensive purposes, we're looking for a possible exhaustion and move lower as we head into 91.30. Thank you for the Kiwi Yen article update that you posted last night, Eman. You got it. I had you in my mind. You were thinking, when you guys present or you have questions on specific pairs that we're not necessarily talking about, feel free to throw them on the message board. I'm sure there's someone else looking at it, or there might be an opportunity there. Obviously, me and Jamie are only two people, so of the dozens of assets that we cover, maybe it's something that we hadn't paid attention to. But Kiwi Yen looks pretty good, right? And it was heading into a big support, Eman, last night. So I wanted to highlight that for you. We did get a rebound off it, so things look pretty good. But we will definitely go over that in just a moment. So dollar index, watch for possible exhaustion. Here's what the daily chart looks like, and this is why I like sort of a hold near here. These are basic slope lines we were covering from 2017 highs. Okay, took a parallel of that. Nice little move there, pivots, resistance. Here we are, resistance yet again. The lower parallel again, off that high, the break saw acceleration, support, turned just ahead of that, which was the 88.26, 88.71 level. So from here, really the emphasis is on what we do here. If we break higher at 91 level would be basically those swing lows. 91.33 would be the low day close. Both levels of interest for possible exhaustion if we move higher. Immediately, though, here's what it looks like on the intraday charts. So we had some pretty clean price action within the confines of this ascending formation that we highlighted last week. I really didn't know that it was going to hold this well, but here we are, the 50 line holding support, the break through the median line seeing acceleration. And here's a confluence region, 1618 extension off the ascent from the lows and that 50 line. You saw a little struggle there yesterday or overnight trade, but we finally pulled back. So immediately heading into the US trade session, here's the 120 looks like. Watch for that 90.11 level. Okay, it's right here. This is a former swing pivot low. We gapped below it, filled the gap right there, then moved off. And this is back again in January. So a region to which to keep an eye on. Once we came into it, we failed. The break saw acceleration. The median line converges there now. So as we head into the US trade session, watch 90.11 as support. If that gives out, I would be of the mindset of looking for a steeper correction. First towards the 50 line, bullish invalidation at this point gets raised up into 89.55. That's the break that you need to see to put the resumption of the broader downtrend in play. Okay, but as it stands right now, 90.50 is going to be your near-term resistance. Or bearish invalidation for the broader decline is still 91. And again, that 91.33, that low day close, if we break that, that's straight bullish. Okay, you have to look higher at that point. Not our favorite scenario, but certainly those are the interpreted levels if we were to reverse this near-term trend here. So I'll be looking for a reaction here into the US Open. If we break lower, like I said, keep your eyes on these two targets. With the long side at risk, still below 90.50 near term. I saw the momentum breakdown in the 120 here back below from overbought conditions. On this decline, if price holds here and the RSI signature holds at 50, that would be constructive. Okay, and I would suggest you look for a late week high. The one thing I want to note on the dollar index that is contrary to some sort of larger hold here is the fact that we broke the weekly opening range yesterday. So if here's your weekly open, you stretch into a high, you try to make a recoil back towards the lows, and you can't even do it. Once you break the highs, you look for a Thursday, Friday high. Now it is Thursday, right? So it could be that this is it. I don't know. Typically, like I said, I like to see that late Thursday, Friday high. But as it stands right now, all the focus for me is as we head down lower into this 90.11 region to look for some near-term support. Okay, the break there would put us right back on track. So what does that mean for the dollar crosses? Well, again, we always want to take every trade on its own merits versus the euro, for example. Let me go over that next. This was one. Any questions here on DXY before we move off? Here's what the euro looked like last night, and here's what the euro looks like now. So from the daily chart, 122.56 is where we were trading. I just wanted to highlight on the daily chart a confluence region here. You have some slope in red that converges on the upper median line parallel in blue. That's basically where we are right now. The near-term resistance basically into 123, okay? And for me, this is very, very important, okay? If we were to break below this level, specifically 2167, that would suggest there's a bigger decline, a bigger high in play. As it stands right now, here's the 240-minute look like. The reason that this thing really, shifted more aggressively bearish was obviously the break here yesterday of the weekly opening range. Not only that, but breaking upslope support. So you had the median line, which was rock solid support. The break saw acceleration. Support. There's the break. Took us to the lower parallel. We rebounded off that perfectly before moving higher, and then there's the final break. So yesterday, as this thing was breaking down, the focus on the 120-minute was to look lower, okay? And 122.46 and 121.94 are the immediate downside targets. 121.94, by the way, is the exact 1618 extension from the decline off the high. So here's what euro looks like now. Take it back to the daily charts first. There's the reason we were looking for some support, former slope resistance for just this near-term channel off the November lows. And then you have the broader upper median line parallel, which converged right there. You can also see this formation pretty clearly here on the weekly charts. Here's what it looks like there. And we've simply broken resistance and checked it as support. So again, I'm starting to look for some possible hold here, possible support in the euro. If it does, okay, we get some sort of near-term trigger, any type of long exposure you take, you don't want to get too aggressive on it, but it needs to be against the lows. And you look for that final stretch near 126. So the daily chart's pretty clean on where we are. If we settle lower below that median line, like I said, 2167 would be a level to look at, but really you're risking a larger drop to last year's high day close, and that's going to be right here. That high day close also matches up with the 2012 low, and that's 2042. So broader levels remain clear. You're breaking from overbought territory again, so you want to use a little caution here. But the euro on the daily chart at support, euro dollar on the intraday chart. Also keep in mind the daily chart did give us a support trigger break here in momentum. On the daily chart, here's what it looks like, and this is why we were looking for some settling down here. 122.46, there it is. Came a little bit later than expected, and here's a little bit of rebound. This is a simple 38.2 retracement from the advance off the lows that we made in December. So just taking into account this rally, a basic 38.2 comes in right here, former swing lows. Just lower, you have that confluence region of the 1618, 121.94, and the 50 line. Okay, so near-term resistance right now, look for 22.96, 123 essentially. If we were to break back above that, you'd start to look, for a rally up towards this confluence region here. That basically comes in at 123.68. So let's see if this rebound has any teeth on it. Nice little support trigger there. Looks like it wants to attempt to break. If we are able to make it through this 2-hour close above that region and price max is above 123, look for that rally back towards 23.68. Okay, largely this is still just testing the bottom end of the range that we're in. One other thing that I want to do real quick is just a break of this range. So a lot of people may be thinking to themselves, Mike, doesn't that look like a double top to you? It could be. Once, tested twice, a downside break of the lows, saw acceleration. So that would give us a measured move of 2146 down here. So the potential, again, for further losses is there. I do like the near-term support that we bounced off of. So on this rally, see if we test the upper parallel. I don't think we get quite that high, but I do think that the risk is for a little bit more of a bump here in the euro. Questions on the euro? Look, I didn't have the guts to take the long here, so I'm not in this, but you know, obviously, if you saw that hold an overnight trade and you saw the momentum reversal, you know, watch 22.96 specifically. Okay, there was those former swing highs, former swing lows, and then that 50 line to the upside if we do get up there. Both areas of interest for possible exhaustion if we do get the rally higher. Not my favorite setup, guys, but I thought I'd give you an update on this. On the back of the breakdown. The play here was the short from the earlier of the week. Once we broke, if you guys remember the previous update in the 4th, all we were looking for was a possible break of the median line to get this going. Once it broke, because we had 4 tests of support just over the last 2 weeks, you know, that really shifts your focus to the downside. So at this point, really can't advocate trying to chase this any lower. See if we kind of get some sort of recovery back towards the 50 line. You know, if we get the upper parallel, great. But ultimately, I do think both of those would be, you know, a near-term sell. Questions? Immediate focus heading into the U.S. trade sessions, possibly for a pop higher here in the euro. Okay, moving right along. That's number 2. Aussie, our favorite play of the week, has been playing so nicely, and it's good for a change to finally get something a little clean. We'll come back. We'll come back to the pound in just a moment. I do want to go over that. We got the BOE interest rate decision earlier today, obviously holding rates. So we'll come back to the pound. I just want to go over the Aussie because, again, this one I think is coming into a big, big spot. Pooja said, I just took a short before Europe at 122.80. Got stopped out at 122.50 in this rebound. So you were short. So Pooja, you took profit at 122.50? On the way down? Am I reading that right? Okay. On the way back up, she says. Okay, great. So, but it was a profitable trade. You took that 30 pip, right? Yeah. So for me, again, I do think that you're on the right track. I just think that we were catching late, trying to press that 22.40 from there. The 122.25 target, that 38.2 retracement was the first target noted last night, backed by 21.94. So now that we've rebounded off it and you made an outside candle on that 2-hour rebound, I do think we need to respect a little bit more of an upside swing near term. But Pooja, not too against that entry as it were, but once you saw that recoil off 22.25 and specifically the magnitude of it taking us back above from oversold conditions, suggests maybe you got a little bit more upside to go before we turn again. But not a bad trade. Not a bad trade. Some tricky territory here in the euro. But as far as the Aussie is concerned, here's, she says, yes, thanks. You're more than welcome, Pooja. So here's the Aussie dollar, right? The previous day, if you guys remember, we went over this yesterday. We were looking at Aussie. We were saying, look, you know, at the end of the day, sorry about that. I think I just froze up for a sec. But at the end of the day, when we look at the 6th here for the Aussie update, we were looking for a hold right here. Weekly open resistance 79.13 coincided dead on with that median line, and we were hoping for a hold to see a move lower. Initial targets were the 50 line. I told you that yesterday as we were heading into the end of the webinar. We were right there. So I cautioned you guys to maybe take a little bit of profit there, but the trade still looked pretty good, looking for the extension to 78.13, 78.18. So now we've gotten that move. Where do we go from here, Mike? Well, here's what it looks like. As I said yesterday, I can't advocate chasing any lower from here per se. Look at the Aussie dollar on the daily chart and look where we are on the weekly charts. Both of them suggest near term, you want to use a little caution. On the daily charts, you have the 200 week, or on the weekly charts rather, you have the 200 week moving average. We're probing that right now. The emphasis is on whether we close above or below it. So wouldn't be too surprised if we settle right around there. Next downside target would be 77.50, but right now, again, precarious situation, right? Daily chart. Well, daily chart has former trendline support just off the basic lows that we made in May of last year. Okay, 1 touch, 2 touch, 3 touch. The break saw acceleration. The breach saw acceleration. That same slope coincides dead on with the yearly open at this point. We probed just below it in overnight trade, but we're basically trading there right now. So on the back of the decline that we got and the basic, obviously, breakdown sell-off from the ascending channel off that December low, at this point for that pullback, wouldn't want to get too aggressive down here. Okay, let this thing rebound. I'm sure we'll get another opportunity if we do get some sort of near-term rebound here, but I can't advocate chasing this any lower. You're testing the yearly open, you're testing slope support just lower, you even have the 100-day moving average. So for me, I'm neutral here. I don't want to chase it any lower. We've been phenomenal on calling this one as far as the short side's concerned. But from this point right here, you want to be a little bit more. Cautious. Let's say that. Okay. Questions on Aussie for the daily. Here's what Aussie looks like on the intraday charts. Okay, and here's what we look like last night. Okay, so we were breaking down. It was a perfect hold here. We finally moved down. There's support structure. As I said yesterday, I can't really advocate chasing this any further down from here. So look, you're getting divergence all up into these lows. A new low, a new low, a new low, higher low, higher low, higher low. And now the reference point's above the oversold condition. So the exhaustion signature is there, okay? But price hasn't really validated that yet. A look at near-term price action here, just on this 120-minute chart, you can see we've basically and essentially made an outside reversal candle just below that. So if we pop back through, specifically the Asia opens, but if we pop back through the median line, I would, or the 50 line here, I would advocate, or I would be pretty comfortable seeing a little bit more of a near-term bounce towards the median line, and we'd have to reassess what price does as it gets there. But as it stands right now, downside bias on the Aussie on the broader theme hasn't changed near term. I am looking for some sort of near-term recovery in price before we can try to press this lower. Eman says, I closed my Aussie short at 78. Well done. Wow. Well done. Well done. And went long at 78.06 for a target at 78.50. Not sure if I did it right. So you're looking for 78.50. Okay, so you're basically looking for a return back basically to the median line, right? I like the idea. Where's your stop on that? Is your stop just below this low here, E-man? I do like the target. You might want to choke that in just a little bit to see the median line first, but your target or your stop's at 77.80, so it's just below the lows. Okay, yeah, I'm fine with a play like that. Let me just look at this a little closer in near-term price action. Here's the 60. Here's the 30. Here's the 10. So the 10 actually had a very decent momentum trigger. Here's your resistance trigger, right? That would have put you long, basically exactly where you got long. So I do love the entry on that one, E-man. Look, this is your pivot. Okay, it's all about the 78.20 level, 78.18 level. This is your pivot. You can see support into that region, support, a little bit deeper of a thrust, then a bounce. Then once we broke it, it was instant resistance and instant resistance. So your trade is predicated on a break above that. If we do break above it, E-man, the best way, again, this is just my humble opinion, the best way to play it is if we do break above it, bring your stops to break even, protect your trade, and then look for, possible, a little bit of interruption here at 78.44. Ultimately, if you do get up into the 50 line, that's even above 78.50. So I would be looking at that high, see if we can get through, and then target the 50 line. Maybe take a little bit off here, bring your stops up, and then look for that final stretch. But ultimately, I do think that this thing is a little bit at risk. Now, on the caveat on that, E-man, if 78.18, 78.20 holds into the U.S. trade session, and you do see a downside break back below 78, I think that would put you at risk for a little bit of a larger pullback towards a lower parallel. So just know where your risk is. I like the entry. You got a 20 pip stop on that. Can't go wrong. So if you do get that pop through 78.20, I think you're all good. I think you're all goody, man. Good luck on that one. Well played on the short side. Well played. That was a really nice. That was a really nice close at 78.05. It's exactly where I would have gotten out. E-man, does that help? Does that offer some clarity on that trade? All right. Got you. Thank you. It's your setup. Again, not my levels or the market's levels, E-man. I'm just trying to help you find them. Okay, so that is Aussie dollar. Going once, going twice. Any questions on the Aussie? It's been our best play so far this week. Aussie dollar and Aussie yen, both. It's perfect. It's just sexy. The setups are beautiful. So keep that in mind. The other trade that didn't go, right, is pound dollar. So pound dollar, or pound Aussie rather. So let's take a segue back through last night's update. Let's do pound dollar first, and then we'll jump into pound Aussie. So here's what pound dollar looked like last night. I just wanted to highlight that 138.40 level. It was a very nice key support level. Why? Not only is it a basic 618 longer term retracement, but inherently in price, you've seen very clear pivots in price. Here's your resistance, breakthrough, a little bit messy, but the break finally did see acceleration before instant support at that level. On the way down, there was the low that we made for the weekly open. We rebounded. Now that same horizontal level converges on what? The median line for the current operative formation. Remember, these confluence regions always are going to be my favorite play. Always. Okay. So for me, the game plan heading into the BOE was very clear. This is the range that you need to clear. A break below 38.40 would have opened up, in my humble opinion, a massive decline. Okay, and a big risk for a larger correction down towards 136.70 and change, 136.80. But the preferred play was to see a range break to the upside just to test resistance at 140.30 before resumption. So long story short, we got the BOE interest rate decision. There were some caveats to some of the commentary that came out, guys. They did suggest that domestic inflationary pressures are beginning to firm. Remember, that's their main mandate. And certainly at the same time, which was interesting, they started to talk down expectations that they may, in fact, need to raise rates faster. That's sort of been the concern. You even had them throw out some commentary that the lower sterling is actually a boost, a tailwind, if you will, to the economy. But certainly, they really curbed the expectation that they may need to hike rates faster than expected. Lo and behold, sterling started to rally. right? And I think that's off the cues that, in fact, the inflationary pressures are starting to firm. And that's sort of the main thing that all these central banks are starting or are attempting to stoke is inflation. So long story short, we rallied higher. Here's what sterling dollar looks like now. Okay, first on the daily chart. There's that 618 retracement. Just to give you a reference, that 618 retracement is the Brexit range. So here's your Brexit day back in 2016. Brexit ripped into a high into 150 before completely collapsing. If we take into account that complete Brexit sell-off, the 618 was right here. It lines up perfectly with the previous yearly opening range low for 2016. Once we broke, obviously we made a late year low. So yearly opening ranges here, very, very clear in play. That swing low converges dead on with the 618. You saw a little hesitation here. We tried to get through it. We failed. We finally did, saw acceleration. And here's the reversal. So this now constitutes an outside day reversal off support. The low here just fractionally lower below the low we made previous day. The high taking out the previous day's high. An outside day reversal off support typically will be near-term constructive. Now, the one caveat with this is that this rally is now at near-term resistance. I think this is where we need to pay attention. If you're holding longs, I don't want to scare you out, but definitely here is something for a near-term trader. I would be doing something, either bringing my stops up to break even or better, taking a little off the table. But we are at near-term resistance, which I'll show you in a moment. The outside day reversal certainly suggests a little bit more of a bounce. And again, don't take these outside day reversals, guys, as sort of carte blanche, right? It's not always going to be the play, you know, a blind play for the opposite side. But the last time we saw an outside day reversal was right here. And that was at the highs. That outside day reversal charged a 4-day decline. Here's an outside day reversal off support. And again, could see some more upside in pound. So you know the broader picture remains constructive. If we're able to close above the median line, it's all the more fuel for the fire. Initial resistance from a daily standpoint stands with the monthly open. That's 141.89. Okay, to the intraday charts. Or I know, let me just show you the weekly chart first also for pound. You know, something that's been very, very clean. There's 39.50. There's those swing lows from right here, which literally caught the low almost to the pip. So if we close above this again, keeps you in the top half and the top quadrant of the ascending broader median line formation and keeps this thing constructive. Here's what it looks like on the intraday. We're looking for a break of that right now. Here's near-term downtrend or near-term downtrend that we've been following of this pitchfork. You can see the 50 line's been a pretty decent level. We tagged that as resistance. The median line, we soared through it here earlier in the week to make the weekly opening range lows, but here we are again, tapped it once, tapped it twice. The break above 39.43. This is the range that we noted last night was the focus. Once you broke to the upside, here we are. And this, my friends, is near-term bearish invalidation. If we break above this, it would invalidate the near-term downslope that we've been in for the last 2 weeks. Such a scenario, like I said, the weekly open comes in at 141.40. And then again, the February open comes in at 141.89. Questions on sterling? Good morning. How do you use ATR with setting stops, Christopher? So Chris, I don't really necessarily use it to set stops. The most important thing that I always need to press on every single trader is your stop needs to be based on not some sort of measured movement, but a technical level. It needs to be against resistance, against support, against the former swing high, against the former swing low. Against median line resistance or support. Okay, that's the most important thing, Chris. Having said that, personally, when I'm looking at the ATR, I try to typically, if it's an intraday or intra-week position, Chris, I typically like to take a quarter of it. Now, sometimes that's going to lead you astray because when markets are really in an outsized volatile type of environment, which is what we are right now, sometimes you sell yourself a little short. Okay, and I don't want you exiting a trade just because you got 25, or 25% of daily ATR, and then all of a sudden, there's resistance, but the resistance is still 15 pips. No, wait for that resistance. But once you click a quarter of the daily ATR, that's when I'm typically starting to look into price, looking for exhaustion, looking for those next targets to hit. But on average, Chris, a quarter is what I use just very loosely. And the reason for doing that, Chris, just so you know, is, There's 4 major sessions throughout the course of the day. There's Asia, you go back into Asia Pac, and then Europe, and then the US comes into play. So, the 4 major sessions throughout the course of the day. Typically, if I'm trading intraday, I should be looking for a quarter of what the daily average is giving me. And just kind of use to set my expectations both in price and in time. Right, Chris? If I'm looking for a trade for a 300 pip or a 200 pip rally, right? And the daily ATR is, 75 pips. Well, that gives me reference. With the same respect, I'm not going to look for, 150 pip target if a quarter of daily ATR is only giving me 20 pips. So it sets your expectation of how long you should be looking to stay in the trade, both in time and in price. But ATR, Chris, I just want to use it as, a guide. By no means is it a strict rule that I follow, but on average, about a quarter is what I look for. Christopher, does that make sense? Does that help? Good question there. Okay, moving right along, we did pound dollar. That was number 4. And I want to take a look at pound Oz. Here's number 5. He says, yes, thank you very much. You're more than welcome, Christopher. Good question. So let me just jump into pound Aussie. So obviously we went over Aussie dollar, continued weakness, but really shaky here, right? Slipping below support. I don't really want to try to test the short side in the waters for Aussie anymore. So you could see a rebound in Aussie. Interestingly enough, pound Aussie, which is a trade that we've been following all week long, you broke the upside of the formation that we were following, and that invalidates the downside bias. So remember, pound Aussie was a beautiful trade up until this break. Remember the previous day. By the way, guys, note that when you click on the link for the previous article, it doesn't just take you to that article, it also takes you to where that report is in the article. So if you just wait a second, the page will auto scroll down to right to that part. It takes me a lot to do that, so make sure you're taking advantage of it. But if you remember the previous day, the major play here was to find a rally, and for a rally to fail ahead of 77.64 for a short position against that high, and then looking for a final drop near 75.90. We didn't quite get that, right? You did get an initial tag of that region, a beautiful pullback. The pullback materialized into well over 100 pips. So there was a perfect opportunity to play that. But then yesterday in the webinar, we started to say, whoa, we made an outside 4-hour reversal off the lows, and here we are heading back towards the highs. I would have loved to see that high hold for a move lower. It didn't, right? Near-term bearish invalidation was 77.64. We rallied right into that. Once that broke, here we are into new highs. So for pound Aussie, guys, look for 80 is going to be a soft target, followed by the upper median line parallel, former parallel support. It should be somewhere near resistance. So that's just right around the 180 level on the upside here for pound Oz. Okay, I just wanted to leave this here to show you the break. And not only does this break invalidate the near-term downslope that we've been working with, but it also invalidates the objective weekly opening range high. So just on a basic price action standpoint, aside from what Mike Boutros thinks or what from Jamie Setley thinks or anything, this thing just made a weekly opening range, broke the weekly opening range highs. You look for a late week high. Near-term focus still remains higher in pound Oz. Any questions on pound Aussie? Again, keep in mind again that most of the event risk is now flushed out for the pound. So really be focused on price action here. But broadly speaking, we've been seeing pretty good price action as far as support for the pound is concerned. So from here, we can go ahead and dump this slope, dump this slope, dump this. This retracement has been invalidated to the upside, so now null and void. Okay, I put bearish or bullish invalidation right here, guys. Okay, only a break below 77.20 would put this thing back on the bearish account. Let me take that back. The first area of support, if we do pull back, you'd start to look for is at the weekly open, which is right here above that 786. So 78.04 into 78.20, let's call it. That's your first initial support, the weekly open, right? Bullish invalidation, again, the thing that would put me straight bullish would be a break below this slope, former swing highs, pivot in price on both sides, and that's right around 78.20, 77.20, 77.19. All right. Here's pound Oz on the daily charts. And if we hold above that median line on the close today, levels look pretty good. Going once, going twice. Anyone involved in pound Oz or any questions on this cross? Has been a good way, guys, to play both Aussie weakness and the inevitable pound rebound that we were looking for. This was a really good play. Obviously we were still trading within that downslope, so I was looking for a better pullback to get long. I didn't get a chance to get into this, but obviously the breakout's pretty clear. Look a little bit higher here in intraday price near 180. All right, let me just see, actually, by the way, does this match up? That's a stretch. Okay. Next up on tap, that was what? That was pound Aussie. Dollar CAD. Here's dollar CAD ahead of tomorrow's employment report. Very interesting dollar CAD price action. And I did note at the very beginning of the webinar that we were pulling right off resistance. We pulled off, crap. I didn't get a chance to get in, but we pulled off a little bit more fervor here. Look, on this trade, the reason that I highlighted it last night was, this was a big resistance region. Where's dollar CAD? We went over Aussie. Here's dollar CAD. So you had 125.89, so 125.90 into 125.97. What's there? Well, you have, first of all, at 129.97, former swing highs from last year. You had this swing high that you made in October. You tested it again mid-October before the final October opening range break, fueled the rally into the late month high. That pivot was also seen again in play on the way down right here in late December on the 28th. Once we broke that threshold, which converged on the 100-day moving average, mind you, you saw an acceleration to the downside. The open of the year, and this is all the things that are stacked up here, guys. So pay attention, because this is why, typically I'm not the guy who's going to tell you, oh, sell this rip rally, right? But when it comes into a major resistance level, I think there's reason to pay attention here. Momentum is basically heading to 60. So if we are still heading lower, you look for some resistance in momentum on a move higher. B, what's lined up here just below 126? Well, that's pretty easy. Again, like I said, those swing highs. You have the 100-day moving average just a little higher now, right into 26. And then you have monthly and yearly open resistance right here. This is where we opened the 2018 calendar year. So as I noted in the report yesterday, that confluence region is pretty big in price. Here's what it looked like on the intraday charts. From the intraday charts, we had an ascending median line formation. This is a newly formed one that we discovered earlier this week. That gave us the median line right here. Once the median line cleared, you saw acceleration and then an instant pullback and test of it as support. So last night when I was writing this, we had the 50 line converging right on that former swing high and pivot in price that we talked about at 122.97, 122.98, 125.97, 125.98, and then a basic 38.2, okay, of descent from the lows that we made last year in September. That same level, which again was the pivot, converged right there. So that 10 pip region, 8 pip region of resistance has held as did hold as resistance on this advance. Here's the pullback. The thing stays constructive, guys, above the median line. So for me, this was just like sort of a scalp pullback to the downside on an intraday level. Also note that you're not really getting divergence per se, which would have been a nice call on these last two highs. Obviously, the oscillator making a slightly higher high as price made a much more concerted high. So you didn't really get the momentum signature that you did. However, you did have a decent near-term trigger break right here. Okay, one touch, two touch, three touch, there's a downside move. Would expect to see a little bit more of a correction lower before we resume, but certainly this is a big, big level. And if it does breach, this would be a simple round trip, guys, for the yearly opening range. Here's your yearly open. You set a high, you come back, you test that high, you make a new low in late January for the first month of trade, you come back and test a high, you now have a clear cut monthly opening range. If this were to break to the upside, you have to be bullish. You have to be bullish, looking for 126.60, 127.15, both of these targets. As it stands right now, for me, tentatively looking lower, ultimately looking for that pullback to offer a long position. But as it stands right now, I'm looking for a pullback off this region. This is very clean, very clean. Now, by the way, just as a caveat, if this does break down, the first thing you're going to want to do is tack on a quick retracement of the advance and see if you get any confluences along the median lines. Lo and behold, the 38.2 comes in right at that region that we're looking at. The 50 comes in just below the weekly open. That's 122.40. And then even though we have the 618 down here with those swing highs, I would still be just looking to exit that trade near the median line, the 50 line here. That's 123.96. This kind of retracement has no bearing, guys, until we break lower and make a little bit more of an assertive, or there's more evidence, let's say, that there's the high in place. So I'm not going to leave that on there, but that's the idea. That's the idea for dollar CAD. And to be honest with you, I think, again, we'll look at crude prices in a moment. Crude is at support. It's dribbling below. I do think you get a near-term rebound, but if crude does break lower, it shouldn't be too surprising to see some further CAD weakness on that. That would be dollar CAD up, right? Questions on Loonie? Employment report on Friday. Don't forget, tomorrow. By the way, guys, quick housekeeping. I will be on Daily FX for the Foundations of Technical Analysis webinar tomorrow. Definitely invite you guys to come to that. Always love to see my SB faces in there. Just more of a webinar on strategy, questions, techniques, and whatnot. So I definitely invite you to that. We won't have a webinar Monday or Tuesday. I will be out early next week. Have some plans for birthday. Both me and Jamie are February birthday babies. So I'll be out for Monday and Tuesday, but we will have back on the webinars live on Wednesday morning. Okay, so that is dollar CAD ahead of tomorrow's employment report. Tentatively looking lower, 25 is going to be the barrier to keep in mind as support. Kiwi yen, this one's for you, Eman. Here was Kiwi yen. Yesterday we were talking about the turn lower, and I thought it looked pretty darn good. Here's Kiwi yen on the weekly charts, and all I wanted to highlight here, Eman, is that we were in a consolidation. Essentially off the 2017 highs, all we've been doing is making a consolidation within that same range, series of higher lows, series of lower highs. So it's in a multi-year consolidation. Okay, the move that we made since the start of the year, we rallied right into the long-term 200-week moving average. We failed. We closed lower on that session. And for the last 2 weeks, we've been trying to break below the 52-week moving average. We're doing it this week. If the market closes this week below that level, it would suggest that you have a lot more downside to go, at least near term. So the weekly charts had a little bit of a cautionary tale here, but I love where we reversed from. The intraday charts, or the daily charts rather, showed a very different story. This story had us basically approaching also a near-term support structure down here. You had a 50% retracement from the advance off last year's late low, okay? And you had current downslope support for the channel that we've been off the highs for the year. So if you take a parallel of slope resistance, extended off that low, one tag, the other tag converged right there. Just lower, you had this region, upslope support and downslope support. So that was 78.80, just a little bit lower. I think I quoted 78.40 or 78.50 as levels of which, if this drops, look for exhaustion. Momentum is holding above 40, so you don't have sort of the collapse type of momentum profile yet. Here's what it looks like on the intraday charts. So for me, 78.69, 78.80 was the first major area of support. This is what we highlighted in the webinar. Even lower, 78.40, 78.50 was that longer term slope. And then, the collapse level, if you will, would be 78.21. So for me, the game plan that I talked to you about last night was look for exhaustion low into one of these levels for a possible rebound higher. Let's just take a look at what the live charts are doing. Dollar CAD, by the way, progressing nicely here. Let's see if we can't get pushed a little bit lower. But Kiwi Yen. So here's Kiwi Yen. We dipped right into that region, a little bit lower, 78.60. We had 78.69 as the lower bound of that support zone. We came a little bit lower, and here's the rebound. So resistance is still up at 79.49. Okay, that hasn't changed. I understand, by the way, a quick caveat, I understand that the retracement, once we break the low or the high for retracement level, we typically null and void that. But for me, the reason I'm watching 79.50 guys still is because A, it's a former swing low and a pivot in price right here, right? Resistance, we straddled it for a good week. There's support, false break to the downside before recovery, and it's also that 618, and it also converges, that's why this was here, on the upper slope of the 50 line. So if we break back above 79.50, I do think you have a larger bounce at hand here. Also note that on this last decline, this is clear-cut divergence in momentum, price action making a lower low, the oscillator making a higher low. One reference point above 30, one reference point below 30 is typically going to be a decent signal. Look for this stretch to give you a little bit more of a pop towards 78.30. By the way, now that we have that outside day or that outside candle reversal, outside 2-hour reversal bar off the lows. At this point, I just want to see what this retracement looks like. And let me get rid of that 618 because the same level converges 79.40s on the 38.2. We'll leave the 50 and 618, get rid of the 236, and adjust this to the new low. Bring in the 50 there and see what that gives us. Okay, I'm going to work with the initial slope of this down slope right here first. Yeah, I think we're grasping at straws here. Eman, I don't know if you're still involved in here, but at the end of the day, the immediate risk, like I said, would be a rebound a little bit higher towards 79.46, 79.50. I want to see what happens there, okay? Keeping in mind one thing, Eman, the one thing that I loved about Kiwi Yen upon reviewing this yesterday is that it's so clean as far as the weekly opening range. Here's your weekly open. You set a high, you set a low within the first 2 days of the week. You test the high, it fails. This would count as a failed attempt of a break of the lows. Okay, so if that is in fact the play, you'd look for this rebound to give you a little bit more stretch to the upside. Okay. I mean, ultimately, put a gun to my head, I still think this is a sell on a decent rebound. I just think near term you have a little bit more room to the upside. Even if you look at the daily chart, you have the 100-day moving average, that upslope 50 line again. That can get you as high as 79.30, still 79.40. That's this region here still. Oh, sorry about that. That's cleaner. 79.35. And that swing low converges with the 50 pretty well. Watch these 3 levels on the way up for possible exhaustion on the rebound. All right. But Kiwi Yen looks pretty interesting. We'll take a look next at Kiwi. And I think that'll give us a little bit more of a tell too. So that's number 7. Any questions on Kiwi Yen, do let me know. Here's Kiwi dollar. And where we stand here. So on Kiwi, it broke and it found a nice support at a basic 38.2 retracement. Now it was ahead of schedule. If you look at this chart, we had this confluence region highlighted a little bit later in the month. This is basic slope or basic channel resistance. We broke, we offered support there before rebounding. It's the slope taking off the lows here. That level comes in just lower below the 38.2. Here's what the intraday chart looks like. And for Kiwi, This was Kiwi yen from last night. Here's Kiwi from earlier in the week. So where'd we turn from? Well, last week we came to a big level that was 73.92, just below 74. You had a basic 786 retracement. You had the reversal day close from last year's high week reversal close, or this was post high week. This was just the reversal close. And that gave us a really nice region at 74. We were looking for exhaustion, 75.16 being near-term bearish or broader bearish invalidation. Remember this formation that we've been in for like 5 years now, guys, this broader median line. So we highlighted this early in the week that we were basically sitting on the 200-week moving average as support and then the 74 level as resistance. So that was really the basic range break that we were looking for. A downside break, 71 on a weekly basis would take you back to the 52-week moving average and a basic 50% retracement of the advance. So you kind of know the game plan of what we were looking for, either exhaustion here for a move lower, or if we rallied higher, exhaustion here for a move lower. Kiwi's been super resilient, and we talked about that. Obviously we saw it partake in some of the declines that we saw on the Friday sell-off when everything got massacred, but a really nice rebound off the 618 took us back into resistance. So yesterday we were talking about that, looking for that range break to really validate it. If we break the lows, likely to see this thing fall apart. Initial targets would have been 71.85. What's 71.85? Well, basic 38.2 retracement from the advance and basic former channel resistance turn support. Here's the live chart now. Okay, we're basically, I'll start off with the daily here. We're basically trading right into that level, right? We came here, we rallied, we failed again at the upper parallel. The break lower pushed us lower. There's that 71.85 target, and we're rebounding off that now. Okay, like I said, a little bit ahead of schedule here. Intraday, looks like this. Downside break of a descending formation typically can be your sharpest part of the move. Here's your slightly, really low gradient declining channel formation. 2 touches of the high, not too big, but we did get 3 touches of the low, which gave me a little bit more conviction on trying to play this break, because once that gave out, there's really nothing, even in a dip in price action or anything, until you get into a basic 38.2, and that's where we found some support. So look, on this rebound, look for resistance back at 72.60. That's still going to be a level to watch. It's been a very, very decent pivot in price. And it has that slope confluence of the longer term 618 that we went over and a basic 100% extension off the highs. So former channel support also converges in there. If we do see a rally or on this stretch, I am looking for a stretch higher from here. I'd have to reassess. Might be an opportunity to short it again. But for me, the immediate focus is on a rally, a little bit more of a stab higher towards 72.60 again for Kiwi. Pretty clean price action. Okay, we've simply broken lower, we've tested this level, and now we're rebounding, hopefully to find resistance near 72.60 again. Yes, I'm not involved, but we'll be keeping my eye at it. Yesterday, when I looked at this chart, kept my hands off it to have your setup first. Yeah, so Iman, yesterday it was a tough call. I think you're talking about the Kiwi yen, right? It was a tough call yesterday because we already started to see it break down a little bit, so it would have been more of a chase move. I just loved where it bottomed because that was the exact region we were looking at. And so when I woke up this morning and I saw that we had seen a little bit of a rebound on it, I was pretty encouraged. But yeah, I'll keep you updated on that pair since you like it so much. Kiwi yen's been falling under the table, but looks pretty decent. As far as dollar yen's concerned, again, initial focus heading to the U.S. trade session is possibly for a move higher towards 72.60. I'd have to reassess there. And that's going to be our immediate downside or bearish invalidation level. If we get through that, I think that pivot and the invalidation of the weekly opening range, again, this is a very clean weekly opening range, right? Your weekly open, you set a high, you set a low, you probe through the highs and fail, weekly opening reversal, break through the lows, looks for a late week low. So even if we get some resistance here, still could be on tap for another drop on Friday, to close closer to the lows. Make sense, guys? That's Kiwi dollar. Next up on tap is Aussie yen, another one of my favorites for the week. This has been, alongside with Aussie, a great performer. As of late, though, we're kind of stuck. I haven't had anything on this over the last 24 hours because, I didn't know how to play it. Here's the last time we talked about Aussie yen was right here. So we've been following this one for a while, ever since the start of the year, essentially. And we were talking about staying bearish while below the median line, the upper parallel. Obviously, last week that scared us with that move into 88.40, but then a quick failure took us right back below. And we've since removed it, but we were essentially looking for a support structure there, which finally gave out late last week. So, it's taken down all our downside targets. I went through this yesterday. Remember that the final target that we had was 85.35 into 85.40. It even got deeper, tagged the December open, which was at 85.12 before ripping higher. Yesterday, we were trading here, and I said, look, even if it breaks higher, our bearish invalidation level is right here at 86.71. Okay, as long as 86.71 holds as resistance, that's our bearish invalidation. I want shorts off that region. Now, unfortunately, you didn't get much of an opportunity to get back in. As I was writing this, we were basically testing the resistance level. So it held. You move lower. Initial targets again, right back here at 86.20. That triggered. Final target again, back at 85.40, 85.36. And again, that's where we bottomed. So ever since then, and the reason I didn't highlight this last night, because I don't really know what I want to do with this from here. Okay. The ultimate play was the break, obviously below the 50 line. We talked about that. Took out all the downside targets. The other play was a short off here or off here, both levels of interest. Top one worked pretty well. If you're holding short exposure, I would have taken some off here, but the immediate focus, guys, is on this mini consolidation below the median line and above 85.36. So look for a break of this immediate range for guidance. Put a gun to my head, I would say that you'd stab lower first and then you find a rebound. But at the end of the day, guys, if we break the median line, we're going to bring back our bearish on validation level to the 50. This is the 50 line. Okay, that converges on former upslope support. Basically right here, like 86.40 and change. Let me just see what this looks like real quick. It's going to get messy, but I just want to check it out. Bear with me one sec. Yeah, all right, cool. We'll do this. Forget the 236. What I do like is that the 38.2 converges right on. It's 88.55. I still would. I don't want to. I don't like to stack up the levels too much, guys, because I don't want. It makes it very difficult for someone who's intraday trading just to kind of identify the level and get in. But watch, if we break here, obviously 86.16, 86.20 is still going to be a pivot that we're watching in price. That level doesn't change. But for me, it's going to be critical up here if we make it up here. If the consolidation break happens to the upside, 86.55 into 86.77 is where I'd start to look for exhaustion. A downside break, sayonara. 85.12 would just be a soft target, but you're really looking for a drop into this big zone. 2017 open, larger, longer term 38.2 retracement, former swing lows from November, you name it, it's all there. Former channel resistance now, support, current operative channel support, all of them load up right here. So the levels are really clear. My immediate focus right now is on a break of this near-term range. If it breaks higher, I'm not going to chase it. If you get a decent pullback, you can get on the long side targeting 86.20 and 86.55. But ultimately, those would be levels of which I'd start to look for, again, possible exhaustion for another downside move in Aussie yen. And typically a good risk barometer. You'll see that start to pick up as we get more risk on, risk off moves in the real sense. I don't think that's really materialized into market psychology just yet, but once it does, the risk sell-off here should further perpetuate this for a downside break. Questions on Aussie yen? A little bit of a bounce here, but ultimately, I do think you keep your focus on that support structure here, 85.36. Questions on Aussie Yen. Okay, I'm over on time. Geez, I do want to go over crude real quick because this is going to make headlines today. Look, what I noted in crude prices was right here early in the week. This was on the Sunday update. Here we go. So on the Sunday update, we highlighted this pitchfork. Okay. In fact, if I'm not mistaken, I think even prior to that, yeah, right here. Here's the Sunday update. That was a Monday update. Here's the Sunday update. In the initial crude look that we took a look at, we were opening right above the median line. Okay, a newly added pitchfork shifted the focus lower, but kept us with a bearish bias below 66. So the focus to start off the week was a break below 64.78. You guys know we talked about that in the webinar. Once that broke, your initial target was 63.20. Okay, now we saw a little bit of a blip here. We did break lower, and we sat here for a while. Okay, go back to the previous update prior to that. For the Monday update, and we were looking at crude prices doing this. A little bit of a blip. We broke back below that level, and we were trading right above 63.20. Now, this was the level of which I was talking about, I think, yesterday in the webinar. We were like, look, you could see a little bit of a bounce here, but essentially a downside break of a descending formation is what? Typically the sharpest part of the move. And eventually we did dribble here for a little bit before finally breaking down. The breakdown giving us a measured move, an extension that we added later at 618, the 1618, and that gave us 61.44. That's basically where we're trading right now. Here's the live charts look like for crude. So on the daily chart, first things first, okay, here is your monthly open. Okay, coming off the upper channel, we were talking about the building ongoing, divergence and momentum, price action making a new high, a new high, a new high, only on a closed basis. Remember, that's the only thing that we're taking into account. So a series of higher highs. And those series of higher highs were matched with a series of lower highs here in momentum. We were looking for the turnover. Now checking objective and basic. Oops. Siri wants to eavesdrop on me. Now we're checking the objective and basic channel support. Converges on the 1618 extension from the decline. So this is why I was a little bit curbing your appetite yesterday as we were talking about the crude trade. Here's what it looks like on the intraday charts. Here's on the 240. Okay, so a near-term ascending chart break, that's what's the formation kicked in. Downside break of a descending formation pattern. Obviously, I think everyone would agree with me, was the sharpest part of the decline. There's 61.44, the measured move. There's basic slope support off the August. I'm lying. This is off the October lows. Let me adjust that. Sorry about that, guys. It's a misquote. But that October trendline support converges right there in 61.44 is what you're seeing. So look, you're going to see a lot of people talking about crude specifically this week because of this decline. We came off of a great level, but we're now at support. I wouldn't be surprised to see this thing all the way up into 63 again. I'm not putting anything on the table. I do think if you do get that rally towards 63 again, you look to sell it, because I do think ultimately we're going to see something sub 60s. 59 would be a great area. I think we'd start to look for the long side again, but all things held constant, I do think the broader risk is still lower in crude. Immediately heading into the U.S. trade session over the next hour or so, could see a pop higher towards 62.56 would be the 2015 high, decent pivot in price. But really, it's one of these two regions. Excuse me. If we get into this region or this region, both of these I'll be looking for exhaustion in price, possible reentry for another short exposure in crude prices. But pretty clean. Any questions on crude? A regular pitchfork, and I was going back and forth through these yesterday, a regular pitchfork further highlighted that support structure, which is why I didn't want to change it, because I think this has a little bit more tell on it in the fact that once we broke, you saw acceleration. But if we are to work with this basic pitchfork, guys, my mouse is freezing up here a little bit. If we go to the original format, a lower parallel is there. The median line comes in ahead of this region. So we haven't seen too many pivots along that median line, which is why I don't want to get too aggressive with it. So again, keep your eyes on 62.56. And again, 62.20 is where I want to stay bearish below. And if we interpret this as the weekly open, here's your weekly open. You set a high, you set a low on Monday, Tuesday. Here's the break. Should be looking for a late month or a late week low. So even if we get a rally towards the median line, rally towards 63.20, inevitably I do want to see the break. 60.80 and 60 are the next downside targets in such a scenario for crude. Okay. All right, guys, that's everything that's on my list. Any other questions really quick that you have? I'm so over on time. I don't know where all the time went today. Dollar yen, look, we're still on the swing side of trades. I'm going to leave that up to Jamie. I'm personally not a big fan of this right now. I do like the idea he's working with, and if you had to put a gun to my head, I do want to be short. I just am cautious because I think you still could see this thing crawl a little bit higher back towards the median line here before we turn over. Long story short, we need a close and a concerted break sub 108.73 to get this thing going. Such a scenario, our downside targets haven't changed for months. 107.83 low day close for 2017, followed by a confluence support down at 107.50, 107.43 is really the game plan. $4 yen. Jamie has the stop above 110.30, and that's pretty much right above the weekly opening range. So I'm pretty comfortable with that. But keep your eyes on this. Again, if the dollar does strengthen, it doesn't necessarily mean you see dollar yen strengthen. If the dollar is strengthening based on risk off flows, yen is also going to be always seen as a haven, and it should also fuel further yen strength, which could keep the upside pretty capped here on dollar yen. Okay. One other thing I just want to just touch on real quick. Gold, guys, gold coming into support here near term. If it breaks above 13.16 today, I do think you get a near-term recovery. But at the end of the day, gold is coming off a big area of resistance, and we've tried to engage how deep the correction gets. Here's what it looks like on the daily chart. You have the median line for the current operative formation that we've been following, and we haven't closed below 113.17, 113.16, which is a confluence Fibonacci level. Watch that, especially now that we've wicked below. If we close above this week, I do think you get a near-term rebound in price. We'll reassess this again tomorrow, but just something to keep in mind if you're looking at the gold markets. Way over on time. I want to thank everyone who joined me today, guys. Thanks again. As always, I will see you on Wednesday. Again, I'll be out on Monday and Tuesday. I will have an update for you on Monday night on SB, so we'll pick up things on Monday night. You're only going to miss the Sunday update, but we'll see you here back on the intraday webinars on Wednesday of next week. Till then, guys, have a great day trading and have an even better weekend. See you next week, guys. Cheers.